Good afternoon, everybody. Welcome to the TraderMerlin Show. It is your Monday edition. I'll apologize in advance. There's a hammer swinging and hitting the wall probably 6 feet from my office space right now, so it's going to be loud during today's show, but hopefully we'll finish building this damn house in the near future. Anyway, hope you all had a great weekend. I enjoyed my little prolonged weekend, having taken Friday off. Had a wonderful wedding with some friends in Newport Beach, actually Huntington Beach. Went to a nice concert on Friday. It was an okay concert. Not really the best I've ever seen. Could have been a lot better. Anyway, hope you did something fun this weekend. Now, as usual, I always start off the trading day by looking and coming in with a set of ideas and things I want to look at. And I really didn't have much on my list. Actually, the only one that really came to mind was Freeport-McMoRan. So part of my day is just sitting there waiting for things to come to limits or orders that I have set in the system already, or just triggering alerts that I have set up. Today, honestly, total snooze fest. I just put equity market snooze fest because for the most part, these markets look terrible today. Even though, yes, I saw there, as Margaret says, great move in the ES at the end of the day. Yeah, those last 10 minutes were fantastic, but the rest of the day, meh, not really any great. I mean, you were downtrending most of the day, but nothing just that exciting. So let's run through our top markets. I'll start off with those, and then we'll go into some listener questions, and then I'll wrap up what happened for the month of July, which is kind of interesting. Worst performer on the day, Bitcoin. I don't know if you guys saw the headline today, but if you paid attention to Coinbase and their drama with the SEC, they were saying that the SEC told them to basically stop trading all these different cryptocurrencies. And this was a while back. And this was before the SEC actually sued Coinbase. And they said, well, why should we stop trading all these currencies, these cryptos? And they said, oh, because it doesn't comply with the regulations. And they go, well, our interpretation of the law is this. Therefore, we're going to keep listing those and give us a reason why. And they didn't, and then the lawsuit came through. So in that statement, the SEC said basically everything other than Bitcoin is a security. So we'll keep reiterating that as we go forward because Bitcoin will be the one that, I guess, escaped some of the scrutiny and regulatory pressures from the SEC and maybe even the CFTC. That said, on the day, one of your weakest performers down 0.63%. And again, nothing really that exciting. Honestly, it does not look that optimistic. I was really optimistic when we held above that 29,740 line that's in red here at the top, but we just creep below it and now we're just hovering there. So don't feel anything really special going on with Bitcoin, even though it's separating itself from the pack with its current statements from the SEC and other entities. So that's your worst performer. 10-year just rolled into the new session. We were down ever so slightly as a candle formed, but on the day it actually gapped up. So we saw this slight little pop up here for the 10-year, but nothing overly noteworthy there. Call it fairly almost unchanged on the day. Now we start to get to the ones that were just boring. Look at the daily candle of the NASDAQ 100, one of the smaller candles you'll see on this screen today. Just a tiny little spinning top, no real direction, not really a big bottom or topping tail. Even when I split this up and look at the intraday price action, here's your 5-minute chart. You know, this was just kind of a slow drift down today, but really nothing that dramatic. And then in the last 10 minutes, it shot up there, as most of the indexes did. So at the end of the day, this would have been a little bit larger of a red candle. But when you finished with that pop, you ended up getting a nice little tiny green candle, which put it up 0.31% at the end of the day. Now, for the month, it's a different picture, but I'll leave it there with that one just so we can start with the daily and work our way over to the monthly here in just a second. So moving up the ladder for today, dollar index 0.18%, continuing its nice move off of those lows. Again, I had mentioned that there's a couple of points I thought we'd have hesitation at. I thought we'd stop at this 100.78 mark, didn't do it. And then coming back to this retest point right here at 101.89, which is where we are pretty much right now. We're at 101.92, 101.88. That line I've had there as well is kind of a retest point. It starts breaking above this, you got to start feeling bullish on that US dollar. And just because I've had these three overhead supply zones that did not hold, did not work, and if that's the case, and we start to see some new highs put in, then all of a sudden, again, we'll delete all these red lines and red descending or head and shoulders patterns formation and start looking more for the bullish play to the dollar. Of course, more bullish play here means that you're going to see the equity markets sell off a little bit, and we'll talk about that here in just a second. Gold on the day up 0.22%. Tiny little green candle there, but continuing after that pretty ugly daily candle back last Thursday. Nice rebound there. Bummed I didn't sell puts on GLD, but the good news is I did sell some on silver, which has a similar looking pattern. All right, top three, podium time. S&P 500 up 0.25% today. Similar picture to what we saw with the NASDAQ 100. For most of the day, this thing was down, not looking good, slow drift, downtrend, and then all of a sudden, again, last 15 minutes, you see here, it says 1050 is really when that thing started to rip up. We go right into the close on real aggressive move, and now just creeping up ever so slightly in the after-hour session for the S&P. So thank you, that last-minute rally, making it positive on the day, but otherwise, it was a pretty weak and boring day, which is why, of course, I use this wonderful graphic here of a guy just going, boring. None of my trades came through here. Oh, by the way, I talked about Freeport-McMoRan, which is FCX. So I had FCX because of this candlestick formation that happened on Friday's session. Some will call that a hanging man because it's like a hammer formation, but at the top of an uptrend. And I was waiting for it to open down below this peak here, just because I don't have an outline on this computer. I was waiting for it to open up down below 43.88 and then have a rally up, but it didn't. It gapped and just kind of rallied all day. So that was one of the ones I was looking at that I missed today. I had order in the system waiting. It didn't happen. Russell 2000 was second place. 1.22% slide or upswing today. I can't even think straight today. The good news for Tom, we are getting close to the top of that box. Let me get this old box out of the way and bring our new box out of the way. Bring in the old one so we could still look at this. Russell's been stuck in this massive sideways range that goes all the way back into June of 2022. So huge swing for it and huge range. So if anybody here is feeling bearish on the Russell, you've got that high point of this zone, which is going to be right around 2035 is the peak there. We're currently at 2015. Oh, sorry. Thank you. Oh, man, I tell you, one of those days. Is it Monday already? I feel like Garfield. Sorry, everybody. I'll go back to our S&P here just for real quick because that was the one I was mentioning there. My bad for not having the screen there. Sorry. I'm over here just staring at the chart. Oh boy. Yes, we're rewinding, Big Ed. Sorry. So let me just go back to the S&P real quick. Sorry about that, guys. I was just sitting here staring at that chart, not realizing that I was not on this one. Thanks, get to it. It's the podcast version today. Okay, so S&P, as I was saying, really everything looking fairly negative and boring until that last 10 minutes, ripped it up, which put it into positive territory, making it really one of the best performers of the day for the big three indexes. Now, when I say big three, I'm talking Dow, S&P, and NASDAQ. The Russell, I kind of look as slightly different. Lost me at FCX. Thank you, John. FCX, here's Freeport-McMoRan. As I was saying, one of my ideas for today coming in was I was actually bullish on Freeport-McMoRan as I'm bullish on commodities, gold and silver. I'm long-term, I'm bullish on gold and silver, period. But I was looking at this one as a potential break above that 43.88 mark. So that was where I was looking for. But you guys know the way I trade these patterns, and this is why I have rules in place. It's that it needed to open below 43.88 and then break above it, and it didn't. It just gapped up above it today and kept on running. So, there were a couple that were missed because of trades, situations like that. But there you go. Sorry for that delay there. I repeat back to FCX. All right. Back to the Russell 2000. This is the one I was talking about with Tom Barr, who's been trading that range. I think he's still doing spread trades and iron condors on this giant range of the Russell 2000, which goes from 2035 all the way down to 1645, and we are just 20 points away from that peak right now. So the question is, do you feel aggressive and comfortable shorting the Russell as it comes in that overhead supply zone because it has not been able to get it above that for over a year now? It's a tough one. It's a tough decision. I myself may actually open up a short position here if we get close to that 2035, but I have to do so with a fairly tight stop loss because momentum has been looking great for the past month and a half on the Russell 2000, which was your number 2 on the day. All right, since I'm still checking and making sure I'm on the charts and not screwing the show up, let's look at crude oil, which is your best performer. Still rocking to the upside. Been a glorious run going back into mid-June for crude oil, where we're down about $67 a barrel. Now we're at 81. Now notice that 82 and a quarter. And again, you could draw a different zone here. I just kind of I just put a line on there as a point of reference, but you're going to put a zone on here. Typically, prices don't turn at a specific level. It's within a range, but I think that zone for me starts at right around. Looks like about 82.40 for crude oil, and we are screaming towards that one right now on the daily time frame for crude oil futures. Now, a little bit higher than that. If we get above that 83.50, now you're really looking at the 92 mark, which will be a pretty big jump from here if we do get that. So something to keep an eye on. You know, we are looking at summer driving, and you know, we want oil to be as cheap as possible during the summer. I'll be driving to Vegas here next week to do that presentation for the Money Show, but it's going to cost me a little bit more, obviously, the higher that this one goes. Tom says, we'll stop out of this weak Russ Iron Fly in the last 5-minute candle. Oh! Dab nabbit. Oh, well. Well, better take a small loss than a big loss, right, Tom? So those are your top 7 markets out there. The other pieces that were noteworthy were not really noteworthy, not much happened, but I want to keep bringing these ones up and keeping an eye on this difference between the 10-year and the 1-year on our yield curve. And not much change today. We are up 0.14%, meaning the differential is getting just a little bit better. Let's talk about the month of June. You know, typically there's all these mantras: sell in May and go away, which means April, May, June, July, August. Those are supposed to be relatively flat, boring months. Well, we really haven't seen that. The month of July was actually pretty good. So let me start off at the bottom and work our way to the top as we talk through these top 8 market indexes now, since I added in the final one and took it from 7 to 8. Bitcoin was your worst performer for the month. I'm going to bring up monthly charts now just to back up this discussion so we can look at that. They should fly you out to Vegas? Yeah, well... yeah, that's an area of contention right there, Margaret. I'm going to be driving myself. So, yeah, not that excited. But here is your Bitcoin chart for the month. I will bring it up here. So down 4.02%. You can see a slightly red candle. No big deal. The good news is it appears to be doing better month over month over month, especially when we go back into November of 2022. So all in all, even though it was negative, I'll take a 4% slide for Bitcoin. That's nothing. That's like breakfast. So I'm not too concerned about that one. But the good news is that's your worst performer. Mario, you guys are on me today. Yeah, I didn't have a chance to fix it. We'll just do this. How about July for Mario? That better? Yes, you are correct. So let me, Michael, you keep pumping Dish. And again, you know, one thing that, you know, you have to be objective. You are in Michael, I love you. You're always on the show. It's great. But you have an opinion about Dish, and your opinion can't be swayed. Your opinion is, Dish is great. I know people that work there. Dish is amazing. And you quote me every time, and you say, hey, Raymond James upgraded it. So-and-so upgraded it. Everyone's saying higher target. What I want you to do is forget about the fact that you're bullish on Dish. And I want you to put a line on the other side of your paper, and I want you to write a negative sign at the top of that. I want you to say, here's all the things that could go against Dish and why it may go down, and be open-minded, because what you're not looking at here, you keep telling me, oh, this person upgraded, this person. There's other bigger firms than Raymond James that have been downgrading Dish. So, you know, you can't look at one side and say, oh, everything's great, everything's great, everything's great. You need to look at both sides of it, and I know you're biased. I know you are biased because of the information you've been posting. But remember, there are other reasons. Now, granted, Dish is done okay. I'm all right with that. But, you know, if you're going to put one side of the story on here, I want you to put the other side of the story on here too, which is there are people out there that are downgrading Dish as we speak, and there's massive competition. I would much rather, if I could take Starlink over Dish, no question, I'll take Starlink any day of the week over Dish, period, because I'm backed by Elon Musk. Go with Elon. Anyway, let me keep going here with our top 7 or top 8. Move on. Dollar index down 1% for the month. Now the Dixie, again, the more the dollar slides, the more bullish that's going to be for the equity markets. Here's your monthly on it. You got two little negative months in a row, which of course we've had a very bullish couple of months for our equity indexes. So that's fine. We like that for anybody who's bullish on the markets. I, for one, think the markets need to take a little bit of a breather and have a pullback. It just hasn't come quite yet. Roaring kitty. Let's see. Moving on up the list. Let's go to gold. GLD is what I use for this one. Some of these I switch back and forth between futures and the ETFs, but I was looking at GLD for this one. There's your little 2.29% gain for gold. Not really anything from a technical perspective that's that great. Some would argue what we have here is a bullish harami. Right, a bullish harami would be where you have a downtrend going, and yes, we had 2 months of down. You have this, the month of July fits almost completely inside of June's trading activity, so some would call that a bullish harami. Personally, it's at near an uptrend or top of an uptrend, so I'm not really concerned about that. I do like that it hasn't made new lows, and again, that's really all I'm going to be focusing on here for gold and silver going forward is its inability to make new lows going forward. So gold, looking fine, slowly building. I do think you'll get back up to those highs there we saw back in 2020, which is right around 194, call it 195. Next, 10-year. I've been watching real estate, and I had a couple interesting discussions with some friends this weekend about real estate. They're in that space, and one of my friends who's in the mortgage and lending industry is talking about the other shoe to drop is most likely going to be housing prices. And what's happened is you had a lot of people during the COVID pandemic were buying homes and Airbnb-ing those because a lot of people are moving out of the cities, going to places like Big Bear or isolated places where you're getting away from everybody and all the chaos and COVID. And at the time, those homes were doing rather well. You can make a lot of money. But now Airbnbs are starting to lose a little bit of their luster. More employees want companies to come back to work. Plus, you're also having cities like South Lake Tahoe are going, nope, you can't Airbnb. There's only a certain amount of homes that can Airbnb. You have to go through a petition process. So now all of a sudden, a lot of homes are not able to go to that rental process. And it's making it more difficult for them to, I guess, cover their bottom line or their pity, as they call it, property tax, insurance, and all that stuff. So not quite sure how this will all drop out, but I think what you're going to start to see is more inventory coming on the markets as people give up on Airbnb investment properties. Plus, you also have the rising rates. So to me, it's almost like it does create a little bit of uncertainty out there because most people have locked into a much lower mortgage than is currently out there. You know, most of us aren't locked into 7s. We're locked into a 3, 4, maybe 5% mortgage, but not a 7 or 8 unless you just bought in the last year or so. So to me, the housing market is that big wild card, and I do think that they could ultimately be that piece that really that cause these markets to take a nosedive in a short period of time. But we'll have to wait and see. And I think the good news for all of us is, if you saved your capital, if you're growing your capital and you're sitting on cash, it may present some great opportunities in housing markets that have gone up a little bit too much. Again, I'm still looking at Big Bear as a potential investment opportunity for myself. And if those prices start to fall, could be rather appealing. Let's see. On my list, that was the 10-year. S&P 500 posting a nice 3.27 gain for the month. Here's your S&P. We've had... if you look at this little guy right here, it actually was a negative month because it opened at 41.90 and it closed at, actually no, it was up, sorry, but half of a tick. So you've had 1, 2, 3, 4, 5 consecutive up months in a row for the S&P on a monthly, and this one was 3.27% coming off the heels of that really nice month of June. All in all, I think it looks pretty darn good for the S&P. Now it's just a question of, do we get to that 4,800 mark, which is only 185 points away. It may seem like a lot, but it really isn't, given how quickly this thing has moved. If you look at the month of June, I mentioned it's 185 points away, but for the month of June alone, they moved 310 points. So we could easily get there in the month of August if we continue with this momentum that's going on with our equity indexes, and all has been looking pretty darn good so far. Good question, John. I could probably find that. John says, what percentage of mortgages are below 3%? I could probably dig and find that, but doing this and transition all the stuff low, as you can see, I'm already screwing up today because I didn't update all my stuff. But I could probably find that if I had TJ here with me to look that stuff up. But that information is fairly available. You just got to dig a little bit to find it, but I don't know off the top of my head, unfortunately. Keep moving up our list. I got S&P. I've got just a few more left here. We've got 5 down, 3 to go. Move to the NASDAQ 100, which just barely eked out the S&P 500. NASDAQ 100 giving you a 3.86% gain for the month, continuing a ridiculous streak. Not only is it 5 months of straight up, but even that 1 month back in February was down, was ever so slightly down. So I'll call it, I'll call it 7 months in a row of just great up moves for the NASDAQ. Now, this is entering a similar situation to what we saw with the S&P, which you're coming into overhead supply. Now I'll zoom out just to here so you can see the overhead supply on this one, which depending on where you draw your lines at, for me, overhead supply on the NASDAQ 100 is going to start right at 16,283. Sorry, 16,238. I'm dyslexic today too. You would think I partied hard all weekend. I didn't. It was a very mellow, calm weekend. So 16,238 is that next big stop. We're currently at 15,857. So we're real close. We're 400 points away, less than 400 points away from hitting that overhead supply level on the NASDAQ. And at this point, everything's looking great. What you do need to remember is that this Thursday is a monster day. You have Apple and I believe Amazon reporting earnings Thursday after market close. So that is the most, I guess, intense trading day of the week will be on Thursday. All right, last two. As we move on up, Russell 2000. Oh, I already gave you the oil one. I'll take the oil off for a second. But the Russell 2000, 6.11% move to the upside. Russell, while you saw the S&P and the NASDAQ posting 5 months in a row, the Russell hasn't. We've had 2 great months, but just 2. Before that, Russell was on a pretty aggressive sell-off for 4 months. So all in all, great to see the Russell do what it's doing. But as we talked about earlier, we're still confined within this yellow box. And given current momentum, it does feel like it's going to break above it. But I still take a short opportunity when we get to those overhead supply zones with the tight stop loss, in case I'm wrong. And lastly, we had crude oil with the best performance out there, and that was posting a 15.81% move for the month of July. Wow. Bummed that my oil got taken away from me. I was selling calls on my oil and got taken away. Made a nice profit, but it would have been a lot better profit if I was still holding my USO today. 81.80 is where crude oil finished for the day. And again, 15.81% move up for the month. It's 2 months of greatness, but grand scheme of things, long way to go before we get back up to those highs in the 120 to 123, 24. The high back here on June of 2022 was 123.68, and we're a long way off from that. Let's see. And I think that is going to cover that portion for us. So let me real quickly cover a couple other topics. You guys might remember I was talking about a guy named Richard Hart, and someone asked, about the different types of cryptocurrency and different types of coins. And I said, look, you've got Bitcoin, which is the coin. Altcoins is anything other than Bitcoin. You have meme coins, which are designed to mock a dog or something like that. And then you have shit coins, which are scams. They're perpetrated on the public to steal money, and you should shy away from them. And I kept saying hex, 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 hex. Probably the biggest scam out there. Well, if you guys see what happened out on Twitter, the SEC went after this clown. This is Richard Hart. This is the guy that basically is running Hex and Pulse Chain, which are both scams. They're both garbage to steal people's money. And today, the SEC went after him. And I all I can say is about freaking time. You're going after exchanges which are selling tokens of legitimate companies are trying to be disruptive technologies, try to do things that improve society, try to bring financial inclusion, try to help out the world improve and advance. Yet scumbags like Richard Hart are out there just creating pump and dump Ponzi schemes, convincing everyone to buy into this garbage. And, he goes into stores and spends $100,000 that basically stole from his people who invested in his project. So I can't wait to see Richard Hart, Sam Bankman-Fried, Do Kwon in prison altogether. It would be great. And maybe show Mishinsky in there too, the guy from Celsius. Get them all in there. At least the Hex guy has fashion sense. Oh, he doesn't, Tom. Oh, he doesn't. He goes into Gucci and just buys suits that are the most expensive thing, but it's great. Someone posted that one, but this is the picture. He's probably the face he's posting today. I don't think he's looking that happy today. But yeah, he just buys the most ridiculous stuff. And it's just if you're buying into a company and the person that was the CEO or running that was buying $60,000 wardrobes and $100,000 handbags and $50,000 keychains and $1 million watches. I don't know. And maybe I'm one of these anomalies, but I think most of you, correct me if I'm wrong, but I think most of you would go, I don't know if I want to invest in this company. He doesn't seem like he's good with money. He's making everyone believe he's dripping and just flowing with cash. But if I'm investing in a company or a project, I'd rather see that money be put back into the business. I love people like Elon Musk who walks around in a pair of torn jeans he probably got from Costco. He doesn't care. He's going to put everything back in his business and try to make what he said come to fruition, as opposed to scamming people like this Richard Hart clown. Give a brand new pair of orange PJs soon. Yeah, and give him a Sharpie so he can, pencil little Gucci logos or Dolce & Gabbana on it. Anyway, I wanted to share this one because I'm just really happy that the regulators have done something, right? They've gone after him, and now they've got a lawsuit against him. They say basically he's stolen $1 billion from the people that pitched into his projects. And I, part of me is like good for the SEC for going after it, but then I marvel at the stupidity sometimes of the human condition. Like, who's falling for this crap? Who's buying this stuff? It's unbelievable. It just blows my mind. Anyway, so Richard Hart hopefully will go to jail here sometime soon. We didn't have anything really exciting on the earnings calendar stuff. There were some comments that came in about Thursday's show where I did a little weekend edition, and the question was, why is our market rallying? We had good numbers. This was a good question that came in from Heinz. It says, it feels like our GDP is a big shitcoin pumped by the Fed. Yeah, well, especially when you look at the composition of GDP, and government spending was the number one category by a huge margin. That's what's pushing these markets up. So I thought that was good. I mean, you're right. It is a shitcoin. Do you really trust it? Do you trust the Fed numbers? Do you trust GDP or PPI or CPI or ADX, all that stuff? I don't really, but I have to have some foundation to say here's where the economy is headed, at least based off of this data. Now, we never know exactly which way things are going. It can change on a dime, which it usually does, but at least I'm using some of that information to formulate my financial opinions about where the market's going to go. Let's see, what else did I have come through the mailbox today? Let me real quickly bring up this one. I'm going to do this more regularly because I think it's interesting how it's transitioned. It dropped a little bit over the weekend. Again, we have an 82% chance of a rate increase on the let me take that back. 82% chance at the September 20th meeting that the rates are going to stay the same with no increase. So another pause, which would totally make sense. Let's pause again. And now an 18% chance we get a 25 basis point increase. Merlin, you filing a claim on Celsius. I do when they first went into Chapter 11, but don't understand the new claim. I didn't see the new claim, but I filed one initially. I already got paid out on Voyager, which is great. BlockFi, I didn't really have anything there. Did you see your Money Morning Must Knows post supporting a Mr. Dwayne Cox? I have no idea what you're talking about, Dave. Let me know what you're talking about there. I'm going to have to look at that one. My Money Morning Must Knows has posts supporting... Oh, you mean... okay. I know what you're talking about. So when you guys go out there and you look at anyone's YouTube videos, so let me just show you this. Hopefully you guys don't fall for this. YouTube. I think what you're talking about is on Online Trading Academy's page. I'm actually one that is monitoring and removing all this crap. So let's go to... I think I know what you're talking about, Dave. So let's go. This is the newest one. Yeah, in the comments underneath. Yeah. So what you get here when you look at this stuff, and just I'm doing this as a public service announcement. I remove stuff all the time, but OTA posted this one. Right, it went out Sunday night. And you scroll down here. It looks like it's usually it's this stuff right here. Yeah, there you go. I'll remove this right after the show. But guys, never respond. Don't do anything with this stuff. Just ignore it. I usually go back through and I remove it right away. But I'm more on top of the ones on my page, personal, and I do the OTA as kind of a passion project because I just think that they need to be. I think you want to keep comments on. You just know, Dave and others, that I am actively out there on behalf of OTA censoring a lot of this crap. Now, if someone has something bad to say, like if someone says something bad about OTA, everyone's entitled to an opinion, and I don't censor those. I won't say if someone says, "Oh, I don't like OTA," I'm not going to censor that. That's your opinion. But if it's somebody like this that is an automated system, this happens every day. It happens on my channel almost every single day on my TraderMerlin YouTube videos and Online Trading Academy's YouTube videos. They're just trying to get visibility, and they know that people are looking through those comments trying to find a solution to their, financial woes. So these are scammers. Never fall for them. You guys should don't ever contact anybody through WhatsApp that you don't know. If someone's like, "Hey, you should talk to my friend. He's an amazing person. Here's his WhatsApp." Don't delete it. Block them. You should never interact with anybody unless it's someone that you know and trust, or someone that you know and trust has recommended that person directly. And even if someone did recommend them, what's happened under my accounts is people have impersonated me. They create a fake TraderMerlin YouTube, fake TraderMerlin Twitter or Instagram, and they will go and they'll go to you and be like, "Hey Dave, how's the trading going?" And Dave will be like, "Oh wow, Merlin reached out and said hello to me. Cool. Hey, it's going good, Merlin. How are you?" I can really help you out here. And next thing you know, it makes it sound like I am actually going to manage your money and do all. I will never manage your money. I have zero interest in it. I will never touch your money. I'll never ask you for money. Nothing like that. So just keep that in mind when you look at other people's pages. There are professional organizations that are designed to steal your money. This is one of them. So what they'll do is they change his name as Mr. Dwayne Cox. And if you scroll down here, they'll put like an Instagram number. So, it's his Telegram, right? So you can go to use his Telegram. It's Dwayner. It's a scam. Total scam. And all these people are fake. Wow, I thought was the only one beneficiary of Mr. Dwayne Cox's trading. His techniques are the best. Dude doesn't exist. I don't ever call it right. I'm busy. Hey, if you reach out to me, generally I'll respond and say hi back. But I'm never, just know, please, and anybody that is ever affiliated with me, I will never ask any one of you ever for money. I'm not going to say, hey, I'll manage your trading account. Never going to happen. One of the main reasons I do this show is I like to empower people with ideas, education, information, so that you can make more informed trading decisions for yourself. And I'll show you what I'm doing at times, just kind of so you can see kind of what I'm saying in action. But yeah, I live under the philosophy of trust no one. When the whole thing happened with the FTC and I saw Mr. Wonderful Trader out of Chicago's actual results and the emperor was wearing no clothes and realized that he's just a big liar, shocked me. And from that is why I have such a disdain for that scumbag. And there's a lot of other people in the industry that are like that. So, yep, careful. Is Brett Johnson at it again? No, this is similar. I'm sure, Lisa, that these are people who understand that this is free marketing for them. And there's a subset of weak people. I'm not going to say weak. That sounds too negative. Of uninformed people that are going to look at this stuff and go, oh, wow. Who is this person? Yeah, I'm not going to give him any money right now, but I'll just reach out and say hi. And now you've engaged. Now you've opened up that conversation, and they are master salespeople that are going to get you to, oh, it's only $1,000. I have a buddy. Oh, it drives me nuts. I have a friend right now. I would show you the tweet stream, and if you're listening, sorry, I won't say his name because it'll embarrass the hell out of him. He's been scammed twice with crypto scams, and that sucks. But fool me once, shame on me, or fool me once, shame on you. Fool me twice, shame on me. Third time, like what? He's got someone who's claiming that they can get, and I did the math for him, it was like 39% rates of return in 30 seconds. 39% rate of return in 30 seconds. Now, I'm hoping that if I was to tell you that I could get you 39% rate of return in 30 seconds, I would hope that a lot of you would just go, F you, Merlin. You're full of crap. There's no way that's going to happen, right? Not going to happen. However, I keep telling him, good luck. I don't want to even talk to you anymore about this because it's a scam. It's not possible. Think about this. If I could get a 39% rate of return in 30 seconds and I compounded, I could take $100 today. By the end of the year, I could run a spreadsheet for us if we wanted to. I'd probably be a billionaire by the end of the year. If you did every 30 seconds a 39% rate of return, you'd be a billionaire by the end of the year. No question about it. Why would they ever want to take your money? There's no need for them to have your money. It's a scam. And he's fallen for it. And he deposited, I think, 1 Ethereum, so like $2,000 worth. He got a 19% rate of return in 30 seconds. He cashed it out, and now he moved his money elsewhere. What'll happen is he's now going to, it's like the drug dealer giving the first one for free. Like, here, yeah, you can have this. It's free. See, everything's safe and good. And you're like, oh, this is great. Let me put in 50 grand. Yeah, boom. Good luck getting your money out after that. So if it sounds too good to be true, it's a scam. All right, sorry, I'm on a rant over here. I just brought the comments to keep on topic of crappy scammers. I know you. Yep. Thanks, Dave. I appreciate that. And I'm glad you pointed out I need to jump on there, and I'll go through all their videos and cut that stuff out. It's unfortunate it happens, and it's not just OTA or mine. It's anybody who has any following on social media will get these scammers out there. They're all scumbag. Understood. Couldn't help the, what do you call that? Yep, I do. I get it. Yes, he is very arrogant as well. Very full of himself. It's funny because the more people you know that individual, every single one of them questions whether that person trades at all. It's just the people around him. Yet he comes off as this, I'm so smart, I'm omnipotent. Oh, I trade on the Chicago Mercantile Exchange. I'm amazing. Look at me. It's so simple. I am an expert. It's like, no, you're an a-hole who fills people with hope that you shouldn't be giving them because you're a failure yourself. As one of my old mentors said, it said, If you can't dazzle them with brilliance, you baffle them with bullshit. I think that's what this guy does. Would you believe 1 minute? No, John. Okay, let me just take a step back and say, could you get a 39% rate of return in 30 seconds? Absolutely you could. But I've never gotten one myself. I've never had a 39% rate of return in 30 seconds. Now, I may have gotten, those types of numbers over the course of a trading day, right? You buy directionally and when markets are just tanking and you got some puts on, okay, great. You're long a currency when they do a rate cut. Holy cow, you're leveraged 50 to 1? Yeah, you can have that type of stuff. But to brag about that and boast as your marketing literature to people, that is just not right. The SEC should be all over that, but I'm willing to bet you this is a non-regulated firm and they're dancing underneath the radar of regulators, raking in as much money as they can. So, when I presented to you guys the 1% strategy, a lot of you are probably turned off by that, going, oh, 1% a month, come on. Oh, sorry, 1% a month, that's nothing. Well, you'd still be beating the markets overall. And if you can beat the markets overall over the course of time, then you're going to be beating the vast majority of investors out there. So even at 1% a month, you'll make great money. Now, you could also, take a little bit more risk and go for 2%. Now you're looking at 24% rate of return per year, right? Is that great? Not necessarily. Not in a year like this when we're way higher than that overall. But if it's a year that's down, market drops 20%, you're up 24, heck yeah. Long term, riding out all those big ebbs and flows, those big swings with, getting yourself stable rates of return, I think is an easy way to do it, which is why I've talked about that type of strategy. I hope that's somewhat appealing. There's a lot of other ones that are very risky, and try not to talk about those. I need to brag about how good I am. I just need to not lose my retirement money. Exactly. I think, forget there was someone in here the other day that was boasting about how much money they were making. I was like, you need to be quiet, man. You shut up. Market's got ears. So this is a complex question. I'll finish with this one. This came in from Gary. He says, won't the Fed have to keep rates higher due to the death of the petrodollar and BRICS CCY uprising? If they don't give reason to hold the greenback through higher rates and confidence in the paper, then surely at some point all the money floating around the globe will come home and bring that exported inflation with it. Good point. There's a lot of topics in here that could be broken down further, but I'm not so concerned about petrodollar. The BRICS might be a little more concerning, and really it's more about foreign countries banding together and saying what medium of exchange can we use over here, and then the dependency on that US dollar starts to go away. That is obviously a concern. In that article I wrote for Bar Chart saying what could possibly replace the US dollar, we ran through some of those options. And I think over the course of time, we will get to the point where it is a real discussion of, well, what's the reserve currency of the world right now? It's not the dollar anymore, right? I think it's going to slow. I don't think it's going to be quick like it was after World War II. I think it's going to be, not World War II, World War I. I think it's going to be rather quick where, not quick, it's going to be a slow process, a slow transition where these countries band together, they slowly build out a uniform front that uses a common currency, whether that's the BRICS, whether that's a petrodollar, whether that was, I think that John O'Donnell mentioned it was like an Islamic dollar, which is backed by physical gold, or other ones out there. They definitely pose a real threat. So sure, how do you keep the US dollar in the forefront? Well, higher rates certainly are attractive for people to hold US dollars, buy our bonds, right? If they don't have US dollars, they have to sell their currency, buy US dollars, and then buy our bonds, which would give a higher yield. But our bonds on the long end of the yield curve aren't that high right now. So they'll buy the short end. And again, it does keep people going and buying into the US dollar, which is great. You are correct that if all of a sudden there's a lack of interest in the dollar, they would be flooding the market. People would just be selling their dollars and buying whatever that new currency is, whether that's the Amero or the BRICS dollar or whatever. That could cause problems. But I don't think that's going to be a fast process. I think it's going to be a very slow one. Historically, we've seen this transition from one currency to another as the world reserve currency as a rather fast process. It's not... I don't think it's going to be that way this time. I think it'll be a slow transition. It has to do with military might. Most of these currency transitions have been because of conflict. And given the fact, I believe the U.S. has I think we have 3 times as many fighter jets alone as China, and a lot of these other countries, they're working on their military as well, but we still have serious military forces, and now I know we're working on unmanned armed forces with drones and things like that. So, I'm not so worried about it. I think that the dollar can certainly float, and it's more of a weaponized tool for our economies and global economies than I would worry about it being that reserve currency. It's just so weaponized at this point in fighting inflation or deflation, whatever the case may be. Mets SS in San Diego TA shop. I was a bit leery. Then the center closed and instructors went away. I sure felt scammed. Yeah, unfortunately, I love the center owners in San Diego. They were really Karen Trisco and Bob, really good people. I really like those. Certain people I don't like, that's for sure. But those guys were a good center. Unfortunately, if the sales aren't there, and there's big overhead with an OTA center. I mean, it's a lot of overhead with the centers. So, a lot of them have struggled over the years, especially with what's happened with the regulatory stuff. It's unfortunate because I love going to different centers and seeing people face to face and knowing that we're making a difference. We're helping people change their financial future. And, when a center closes, I feel like, it's kind of tragic to me. But I guess they got to do what you got to do to keep things going. China has a bigger Navy. Yep, and that's going to get bigger. I mean, they're building out tons. So we've got the air. I'll tell you what, I'll take the air over the sea. I'll take the air. Yeah, I can get it way out there. Yep, OT Atlantis. No, OT Atlanta didn't vanish. I think Atlanta's still going. I think that's Mary Beth Motisi and Kevin Green are running Atlanta. I'm pretty sure that one's still on. I can, let me see which ones are still around. I know a lot of them have closed. Oh yeah, Adam Matisco, he's gone. He went to do other stuff. That team is gone. All right, joining late. Did you talk about what the Bank of Japan has been doing? No. How many ETFs would need to be making new highs before you would say that the new bull market has started? Right now, XLK and XLI are at highs. I wouldn't say there's a specific number of ETFs that would have to meet it. Right? For me, it's a broad market. So I would have to look at this chart over here. Let's get away from this YouTube comments screen. And of course, you guys know when I look at market, I'm looking at the S&P. And, you could still argue we're in a bull market. You mentioned, right, Michael, you said before we go into a new bull market has started. I don't know if it's necessarily ever ended. This pullback that we had here on this monthly, that's just a pullback. And I know it was a big percentage. I'll bring up the percentage there for us so we can see the exact numbers. But anybody who's looking at the monthly charts would just call this a pullback. The uptrend is still intact. It was a 27% slide, so I am not in there. Yeah, John. Bob and Karen started Denver, and then, they started Denver, then they went to San Diego, and I'm not sure where they're at now. But, hey, Josh. Yeah, Atlanta's open. I think that's Mary Beth Matisi and Kevin Green run that one. And those are great people as well. I worked with Kevin on the trading floor back in the late 90s, and he's just one of the most passionate people you will ever meet in your life. Just a great, great person. Talking a good correction and lots of volatility on deck. And of course, Josh is hard working up there in Minnesota. I don't know, Mike, if I would say that this big, I guess, secular market bull rally that started back in 2009 is that done? We never really made new lows. Right here we did on the COVID drop. In 2020 when we broke those lows, that to me ended that first big move. But now it feels like we're just back in it again, with more volatility. You got the big upswings, big pullback, and the way it's ripping right now with the Fed probably going to pause at the next meeting in September. You've got its inverted yield curve, which gives cheap money for the long haul. There's definitely arguments that we could be back at all-time highs here in a very short order. And for those of you who did say that for the year we're going to have a very bullish market, well, you may be right. I certainly am not right. I thought that we'd see a down year, but I'll go to the very beginning of the year. You can see this vertical line right here is the beginning. S&P 500 from January's first official trade to where we are right now, you're talking about 18% move for the year. Not too shabby, but we've got a long, long, long way to go. All right, I got to wrap it up here. I got things I got to take care of. So I'm going to try to get John O'Donnell on the program. He's been really going into the Bitcoin world, and I want to talk to him about the central banks. I want to talk to him a little bit more about macro pictures. I'm going to see if I can get John O'Donnell on later on in the week. I have a couple others of you have been asking for specific guests. Somebody wanted Jerry Baldwin. I'll try to get him on the program as well. And generally, when you guys ask, unless there's a reason why I can't bring him on, I'm happy to bring people on. Again, just so you know, if someone is like over the top sales pitchy and just all about me, or saying things that I think are outlandish or false or designed to get you to sign up through a claim that can't be substantiated, I will remove them and I won't bring them back on the program. Just so you know, sometimes you're like, people have asked me, oh well, why won't you bring this person on? Most likely it's because they're just over-the-top salesy. I'd rather people share information with you and let their education content make you go, hey, I want to go take a class with that guy. That's why I love bringing Bill Addis on. Bill Addis doesn't solicit anything. He just says, oh, I'm teaching a class for OTA. Check it out if you're interested. That's it. He gives great content. You look at somebody like Larry Jacobson as well. He's always, he actually does talk about his courses that are upcoming, but he loves to share strategies and give content, and I appreciate that. There's others who are just like, buy, and I'm like, I want nothing to do with that. Let's see, what else is it? Let's see, Michael Anthony, I was going to wrap up, but I want to go back to your last one. I saw some ticker symbols come through there, so let me just check those ones out real quick. Hold on a second. I thought I had them on here. All right, so you say, why is TUP? TUP, don't know. Tupperware brands? I don't know. I typically, if I'm buying something, it's something that I believe in, right? It's something that I believe is going to be a good company going forward. And it's up 38% today. I'm going to say this, I just don't care. I'm not going to buy Tupperware. I wouldn't have caught this move with Tupperware in a million years because the trend is just absolutely getting crushed. It's bottom feeding a penny stock that was 55 cents. What's the news on it? Tupperware stock skyrockets towards the record 450% gain. We could probably click that and find the story there, but that's why. But I got to ask you before we make a statement on this one is, who would have bought this? Tupperware. I can go to Big Lots. I can go to any grocery store and I can buy knockoff Tupperware in that store, and it's a fraction of the cost. So why would I buy Tupperware? I don't know. Maybe it's just me and I'm arrogant, but I just wouldn't touch it. And, it's always interesting when you look at this watch list. So here's TradingView. I can click on this little hot list and you go, oh, SoFi up 19% today. Or the biggest gainer on the day. Oh, why didn't you buy SNMP, which is up 6,000% today? Well, you didn't buy it. So, I don't know. If you knew something more about these companies and you're really entrenched in it, but Tupperware, I just don't see Tupperware really going anywhere. I can find a million different alternatives to Tupperware. If Uncle Rico is selling Tupperware, you'd buy it. Of course. There you go, Oliver, 99-cent store. Yeah, absolutely. I go to the 99-cent store. So yeah, there's just some companies I wouldn't invest in, and let's look at Nikola, for example. Nikola was called out for being a scam, right? But what does Nikola do? If I put these two side by side and say Nikola versus Tupperware. Tupperware makes plastic containers that we can get almost everywhere. The only reason you go and buy more storage containers is because you lose the damn lids. It's like your socks. They always disappear. So Tupperware, while they're making money selling stuff, there's just too much competition. It's super cheap anywhere, like 99-cent stores, etc. So if I look at something like Nikola, look, I still in my gut think that Nikola is a little bit of a scummy organization because what happened with their old CEO, but I think they have the potential to do some really big things. And I know they inked some deals here, I think maybe it was today, with some trucking contracts. All right, well, I would be more inclined to buy Nikola down at 80 cents than I would Tupperware because I just think the long-term potential that if I'm taking that kind of gamble, I'd much rather go with Nikola because there's more potential there. Isn't Tupperware a multi-level marketing company? I don't know. I would never let a Tupperware person in my house. What are you hung to, Big Eb? What are you hung to? I asked about EGY. You love your penny stocks, brother. Valco Energy and REI, which all are all oil companies that I asked you about at the beginning. So I'm bullish on oil, but I don't know. I'm not in the oil space to make an informed decision about the fundamentals or these businesses. And honestly, Valco Energy, I've never heard of. I typically don't trade things that are under $15 anyway, so these wouldn't even make my list. As Dave says, yeah, my scans require a minimum of $15. Right, so this wouldn't make my radar. And the other part here is if we look at it, I'm willing to bet you that they're probably very thinly traded. So let's see, what do we got? 700,000, 500,000 shares a day. So this is way below my volume limit anyway, so I'm not interested just because it doesn't meet my criteria. Let's see, what about the other ones? All right, you're throwing too many at me here, Michael. I got to wrap up, so let me just go Para. Similar boat, although this has much better volume, right? You're talking 12 million a day. But look at the chart. Why would you buy this? It's going nowhere. So, I mean, look, make it simple for yourself and just go like this. I'm going to take horizontal lines and say, okay, if we get above this peak here, it's $17.19, I'm going long. Until that happens, leave it alone. Leave it alone. Just stay away from it. There's no point. And last one I'll do is CHP, then I'm going to wrap up here. CPH, excuse me. Similar picture. You know, you're going penny stocks. Here's the thing, Michael. When you're looking at penny stocks, you're hoping to hit the home run. The vast majority of people here are not looking to hit home runs. Would everybody here like to hit a home run? Yes. But when we come up to the plate, and I'm using a baseball analogy here because every time we come to the plate, it's like you're facing the pitcher and you have to make those decisions about, are you going to buy this, where, what, when, all that stuff has to be made. As a baseball player, I just want a base hit. I'm not looking for home runs. If I get one by accident, great. When you look at penny stocks, $3, $4 stocks all day long, and everyone that you've mentioned here is a penny stock. Penny stocks are gamble stocks. You're looking for home runs. That's not what we do. Anybody can do that. It's just not what the focus of this show is taking those kind of high-flying risks. Now, if I take a portfolio of, let's say, $100,000, okay, maybe I'll allocate $5,000 for gamble trades, and these would be those gamble trades. Now, if you are a fundamental analyst like Larry or others, I would certainly go and do more research on these, and maybe some of them are great companies. I'm not saying that just because they're cheap, they're garbage, but typically when something is cheap, there's a reason it's cheap. Olsen versus Ohtani, oh man, Ohtani. That's guy. I love when I go to the games and get to see him. He's absolutely amazing. Do you see the yellow trucking folded? Yep. Kind of a canary in the coal mine. Trucking with 12,000 trucks. Yes, I know. I saw that folded. That was kind of. There were rumors about that happening a couple weeks back as well, and here it comes. CPG. All right. And then plus I don't play CPG. Still the same thing. You know, you're in energy. You have decent volume on this one, so I'll give you that. You've got volume. You've got something that's really just been sideways for a long time, but this one's starting to look a little bit better. All right, you are making some new highs. Volume is rather decent, so okay, fine for the long haul. But I'm not the type that looks detailed in energies. Typically, what I will do is I'm looking at an ETF like XLE. So instead of trying to find all these little companies and what's the next diamond in the rough, I'm taking XLE as the whole, knowing its volatility is reduced because of all of its holdings, and then I'm playing those moves, which are going to be a lot smoother and more predictable, allowing me to get base hits and not swing and miss a lot. Okay, I got to run, guys. I got too much I got to do, and I wasn't planning to do the hours. Exactly, Talking Monkey. XLT is the way, or XLE is the way. Yeah, it's just much simpler. So let me real quickly bring up here, and I will show you the economic and earnings calendar for tomorrow, even though I told you I was going to be done. I'm still going to get this. Here you go. This is for the first mañana. For the U.S., we have ISM manufacturing PMI, JOLTS job openings. Those are pretty big. You also have construction spending for the U.S. and total vehicle sales, which I don't usually follow that one too much. That is pretty much the big stuff. You can see there are some news announcements for the euro. They're going to happen right after midnight. And then later on tomorrow after the show, you're going to see unemployment rate numbers come out for New Zealand. But most here aren't really trading the Kiwi. On the earnings front, though, there are a couple big names in here. I got 265 companies reporting earnings tomorrow. You've got AMD, you've got BP, Pfizer, Caterpillar, Altria, Starbucks, Merck, Chesapeake Energy, Marathon. So, to Michael's point here, those are a lot of big at least Marathon. I mean, that's getting a big name out there. You also have Electronic Arts, Mosaic, Sirius, which has been crazy, Prudential Financial. So we're going to start to see more and more energy companies reporting, some big names happening later in the week, but that's your earnings calendar for tomorrow. All right, that's going to do it for me. I wasn't planning on doing a big show today. Here we are, a lot longer than I anticipated. I'm trying to push to get to 30 minutes, but I just haven't been able to do it. Anyway, thank you guys so much. I hope you enjoyed the show today. If you did, give me a thumbs up, a like, share it. If you didn't like it, you can email me and always tell me why, and I'll try to improve the dang show. But I hope you all enjoyed and learned something. I'll try to get some new guests on the program. If you have questions, email me at TraderMerlin@gmail.com or put it down below any of the YouTube videos, and I will see you tomorrow. Take care.